Good morning. How are you this morning? I'm just trying to get everything in order. Oh, there we are. Hello. Hello. Good morning. Good morning. Um, just starting the show today. I've had all kinds of wow. The things you get in your text, the thing you get on your text before a show, or during a show. I think sadly I've made the decision that I'm dropping Stream Labs for my live streams in the morning. Two reasons for that. One, I love the picture. I love everything about it, but unfortunately, the files are just so big that when I go to cut them up for edits and stuff like that, it's just too much space. And as much as I like the platform, it's kind of too much for me. It's kind of too much for me, and I see where I'm going, and for me to get where I'm going, Streamlabs isn't going to work as much as I want it to. And I'm not saying that StreamYard's better, but I'm going to go to StreamYard because I was using it for my other live stream at night, and I like it. It's just I need to kind of get used to it. So I think I'll start next week. But then that's a strange time too, because I'm going to be gone. I don't know. It's somewhere Tuesday through Thursday, somewhere in there. I'm going to be gone for 2 days. I don't know which right now, but, anyway, I'm going to go to StreamYards for my live stream in the morning as well. It's just the way it should be. I'm not happy about it. I do like this platform, but I don't like some of the stuff about it enough. There's just so much that I can do. It's too much for me. And so I'm going to StreamYard, and I'm going to have to make some changes. But will you be affected by it? I mean, really, you're not watching the show right as it's live anyway most of the time. So probably not. So anyway, that's a big announcement for the morning. Now, am I going to put in my title, super big announcement? I'm going to, no, it's not that big of an announcement, but, there are things I've wanted to do, with the live stream. And I feel like I've been kind of set back a little bit by, like the level that I need to get to be where I want to be. I can't be messing with this like this. This is something, if I had a lot of time to just sit there and work on all the time, that'd be great. But like, say I want to have a guest on. Now I realize that there's not many people on right now. So there's no guest that's really like interested in coming and talk to me, and that's fine. But let's say I did. Right now, there's nothing I could do about it. I mean, I'd have to switch over to StreamYard anyway. And, I've kind of wanted to watch, ads and stuff like that, commercials. I can't really play commercials through this setup the way I want to. There's just a lot of stuff that's not where I need to be. And no complaint. I just kind of know what's up here. I know what's going on. As far as I'm concerned, I know what we're going to be running into. So that being said, I probably won't switch tomorrow. I might switch tomorrow. I don't know. Got a lot going on this weekend. And I don't know if I should add more stuff to it. Let's go over the weekend, just because it's not a complaint. It's not a problem. It is what it is. So, my colleague Jan isn't going to be in town, so I have to do the showings for her, which is fine. I have no problem with that. But Friday night I have to go to a funeral, and I have to go to a graduation. Saturday I have to show houses, but I also have to get the house in order because we're having people over on Sunday. And Sunday is a graduation party. So we got to be there for that. Big deal. Big deal. So anyway, so then there's Saturday, and it's like Saturday is like all showing houses all the time, but there's been, I mean, I wouldn't say there's been a shift in the marketplace. Like, last weekend I just got run out of the gym with an offer. 22 other people or 21 other people also suffered. I know I'm showing at least 5 houses starting at noon. And then I know I'm showing another place out in West County. So anyway, and I got to write offers if they come through and stuff like that. So it's just going to be a wild time. No question. No question. So, sorry, I'm yawning. I kind of wanted to sort of dig into some stuff, but at the same time, oh boy, not good. Now I'm going to have confirmations coming through while I'm on the phone. Okay. I'm putting this on the side. So, I mean, I wanted to go over something, I guess. I like to stream. Okay, I do. I don't know what it is about it. I'd like to have more people with me. I mean, like by more, I mean more than myself. But I just, there's some guys that are good at it, I guess, or they're dedicated. And like, as an example, I just wanted to go over something that I saw and I was kind of fascinated by. So I have a live stream that I like to do called Our Nature of Employment. And it's at 9:00 at night, Central Time. Well, honestly, I'm about asleep when that thing starts. And there have been times where I've actually just been talking and almost, pretty much asleep. The one episode I'll never forget, I said the word Chris Wallace off the top rope. Like while I was reading an article, it made no sense. And I was asleep. I mean, my eyes were closed and I was just staring at the screen. It was bad. So I'm not very good at, live streaming late at night. It's, work all day. I just get tired. But these guys that are doing it, I mean, they're starting at 9 and they'll go, for them, I guess they're starting at 10. No, he starts at 11. So he's on my favorite streamer. I mean, he starts it's 11 o'clock my time and he's on the East Coast. So it'd be 12 o'clock his time. He's starting at midnight and he'll do like a 3-hour show. And, it's easier. It's a little easier to do a show when you have guests, and it's a little easier to do a show when you have chat. I don't have either. So it's tough because it's always me generating the content. It's always me responding to my own thoughts. But anyway, he's on from midnight. And then another guy I watch starts at 9 and he's on the East Coast. And so he's actually starting at 10. And like I said, I start at 9 and I'm beat by 10. Now they all have guests. I mean, but at some point in time they did it. Okay. They had no guests or they had fewer guests. I don't know. I do believe that something's like drastically wrong with my channel in the sense that, I mean, we've seen train tracks, okay, live streams that have more viewers than I have. We've seen, and by more viewers, I mean, like there's nothing literally, there's all it is a train track and they'll have more viewers. We've seen eagles' nests with no eagles in them have more viewers than I do. So how can that be? I mean, somebody hasn't randomly seen my chat in the past. This is the 102nd episode on this channel. I mean, that's hard to believe. That's hard to believe. And I see a lot of, like yesterday, my computer went on to another live stream after I was watching my show. And it was like there were 300 people watching this terribly produced live stream. There's no way that was more exciting or interesting than mine. There's no way. So I don't know what I did wrong in my settings. I don't know what I've done wrong in my live stream, but there's just something that's just clearly got the date off. But anyway, that's a side point. These guys are streaming, 3 hours, streaming in the middle of the night. I can't stay up. I've got a job during the day. And then what blows me away is that one of the guys couldn't get to sleep last night. So at like 4 a.m. he starts live streaming, and he's still, even when he's live streaming at 4 a.m., he's got more people watching him than and that was he just shows up online. It didn't even, he's got more people watching his program than I have now or have ever had. It's bizarre to me. It's like, am I being punished? Like what did what did I do? What did I do wrong? What did I do wrong? Did I do anything? I don't know. So there's that. Now, the next thing is, we're going to have some changes, unfortunately. I don't exactly know how I'm going to work through it myself, but I know that one of my agents is leaving, and they should. It's okay. Like, it makes me sad because it's over. But we kind of knew it was coming. You get to a certain age and it's like, why do you do this? This game of real estate is tough. I mean, what I'm doing this weekend. What I do at night. What I do during the day. I mean, it's just always going on. It's always happening. And I don't get listings all the time. There's a house down the street next to my grandparents' house, my grandparents' old house. I didn't get that listing. They didn't call me. And they found somebody and they priced the house stupid. And it's like, I literally live in the subdivision and you can't even bother to find me. It's really sad. So it's a tough business. And with her leaving, I'm disappointed because it's going to be tough for me. Like, whenever I go on vacation, I used to have somebody that could show houses for me. Now it's not going to be that way. And I think the thought out there and my thoughts are like, well, just go get new agents. Just go bring in new agents. Well, what am I offering as an independent real estate broker that a franchise business isn't? Do I have better splits? Well, I think so. When you add it all up, I think I have better splits. Do I offer name recognition? No, I don't. Do I offer like events where I can bring in people for, just to talk and hang out and, like skating with Santa or something like, no. So, I mean, there's a real issue there. It's going to be hard. I'm committed. Like, I started the brokerage by myself. I know what I was doing. I know the thought, but anyway, we'll keep going. I don't know why I do this. I mean, I guess I could do something else. That is the real estate game. But there's just something about it. It's very challenging, and it's very there's a lot of ups and downs. It's not nearly like you think it is if you don't do it. So yeah, I'm sad that we're going to have changes, but change is a part of life. And I think that the matter in which things change, it does matter. So do I want to find a new agent, teach them all the things I know, have them go out there and kick butt, and then leave me for some other situation because they've been recruited hard by somebody else? No, not really. Not really. But if you're leaving and you're just leaving the business because it's time, that's fine. That doesn't bother me at all. I think that makes perfect sense. So, that being said, I I've got some friends, and I'll call them. I've got some brokers across the country that I can turn to and talk to, and how do we fix this problem, or how do I move where I need to move, in the business. That's something that I want to work on coming up. So I didn't mean to be so random. I'm just trying to process everything today. So today is Thursday, the 19th, 2022. We know there's going to be showings on Saturday. I had a buyer that put in an offer this past weekend, and they didn't get the house, and so now they've kind of disappeared. Because what's the point? You put in your offer, and 22 other people have an offer on the house, and you don't get it, and it's like, I just don't need this. And just wait until there's a time when we do need to buy a house. Wait until somebody needs to sell their house. That's all. I don't know. I get it. And then we have some other people that I think it's weird. I have some buyers that have just disappeared because it's been impossible to buy a house. And then I have other buyers that have stuck to it. And will they be rewarded first? Yes, but they're also cognizant that the market is just crazy right now. So we'll have to see how this all shakes out. There was a house in the neighborhood, and this buyer wanted to make an offer, and then they realized that the basement was trash and the house wasn't that nice, and there were nicer houses for the same price. And so now, like, that house came to market, and then my buyer's gone. They left the market. They don't want to be, fighting with people all the time. So anyway, that's kind of where I'm at. Not very exciting today. Kind of mellow. Kind of mellow because there's just things going on. Like this weekend is going to be stupid busy. I'm kind of looking forward to like Monday. And it's Thursday. Because I just feel like it today, I'm going to go over things that are fascinating to me. So do you think that I could, I like to talk about my fears. So I think my biggest fear is that I would have a live stream and I would run out of things to talk about. And so I only do a live stream for about an hour because there's nobody here. I mean, who am I chatting with? Who am I interacting with? There's no one. So it's an hour, and I could go long. I've always felt like I could go long. My first shows, A Case of the Mondays, used to last 2 hours. We used to just do more articles. We used to do stuff like that, but there's never been a time where it's like I don't have anything else to say and I'm going to quit. So I almost kind of want to do like a marathon live stream just to see if I could get away with it. It's kind of weird, and I have this set up, and it's a little bit easier when I think 2 screens would make things better, because I could literally just put one screen with my chat, and then the other screen I could be pulling up information and stuff like that. Because right now it's hard. Like if I need to do something, I need to switch over, and I don't know if you can see, but I'm gonna. So I think I saw that it made the screen really white, so exactly what I'm doing. When I'm switching windows. So that's it. And then in theory, I could look at Twitter all day long and just respond to someone. I'm just for fun. Let's see. So I'll go on Twitter, and I've always got plenty of content. So we're in St. Louis, okay? And an article out of St. Louis Magazine says on Twitter, it says, around the same time that Strange Donuts was named one of the top 25 donut shops in the U.S., the donut shop received backlash on social media for a recent promotional post. So what did they do? What was the bad post? I don't know. I'm doing it right now. It was a strange weekend, it says, for the co-founder of Strange Donut juggernaut with locations in Maplewood, Kirkwood, and Creve Coeur. So, since opening nearly a decade ago in 2013, the local donut chain has become known for its creativity with Duns, as it calls them, its collaboration with local restaurants, and its whimsically named one-off specials, such as the banana cream stuffed Fat Elvis. Last Friday, Strange Donuts posted about a new special dubbed The Biggest Bart's Revenge, made with Butterfinger buttercream and crumbles. The post read in part, if you have a peanut allergy, this is your ticket off the planet. That was humor. I caught it. I got the humor. The backlash on social media came quickly, running the gamut from parents with children who have died from food allergies. Wow, that's impressive. Like the idea, no, I don't want to get involved in it too much, but and then it says 2 reactions from those who simply thought the satire was in poor taste. Many asked that Strange Donuts remove the post. The uproar continued on Yelp, where more than a dozen reviewers out of town addresses. Yeah, this is where more than a dozen reviewers with out of town addresses rated the donut shop with 1 star, the minimum star allowable. The backlash continued on Saturday morning on a post Bachman published about a cinnamon roll. And then, so this is the world right now. Okay. You can't have it. You can't make a joke. Is it in poor taste? Who knows? Not if you didn't know anybody that hasn't, passed away from a peanut allergy. Okay. Does that mean you should go and give this place 1-star reviews on Yelp? Does that mean that Yelp is relevant? No, I hate Yelp. It's stupid. When we were doing property management, the tenants would go on Yelp and say that we were terrible property managers because their unit was terrible. We were third-party managers. We didn't even own the units. We had no control over that. We could fix stuff, but that was it. And so Yelp would come to these conferences and say, "Oh, you guys should pay to be on Yelp." And it's like, you're an idiot. Why would we want to be reviewed by our tenants? That's stupid. We have to evict tenants who don't pay the rent. Why in the world do we want their review? Do you think they're going to review us well when we have to go to the courts and throw them out of their unit? It was so stupid. Anyway, he replied this. He says, if you read what I wrote, I was simply describing the donut in a satirical way. I'm sorry that the joke didn't resonate with some people, but that's me. I'm not making fun of allergies in any way. I'm sorry that some people, after reading the words, decided that I wanted their children to commit suicide. I read it again and again. I can't believe that's what people thought. I can sympathize with dealing with life-threatening illnesses because one of my kids had an allergic reaction that put him in the hospital. At that point, I realized my son could die. However, this isn't that. I'm not wishing ill on allergic people or anything else. There is so much going on in the world and so many places to eat and get donuts. I cannot believe how judgmental, self-righteous, and angry our society has become the last few years. When you attack creativity, you end up homogenizing society. It's true, and that's what they're doing. Individuality and expression get quashed. So when people tell me do this or else, I listen. In this case, because I'm the parent of a kid with allergies. So I understand parents who say, I'm afraid of this every day, and you just made fun of it. But that's not where I was coming from and not how it reads. That's how it was. That's how what has become a no-win situation was perceived. If I take the post down, it wouldn't have been fast enough. If I apologize, it's not sincere enough. I'm just sad about that's where we are. He's totally right. If you don't like something that a business does, don't use the business. And you say, well, do that with Twitter. No, is it a public square? When Elon Musk threatens to buy Twitter, all of a sudden, then it's like, no, it's not fair. You can't do that. I mean, the whole thing is a joke. Everything you read, everything you see is a joke. 100%. And so I remember Scott Adams, he says that like only a third of the country has a sense of humor, the population. And he means that. And I understand it. Like there's humor that I don't get. Hannah Gadsby on Netflix, it's not funny to me. Not funny at all. Not at all. There's no point in it, actually. Norm Macdonald, hilarious. R.I.P. Norm. I mean, that's the way it is. So it's interesting. For Deerwood Realty, I started the brokerage in 2015, and I was always very corporate in the sense that I never wanted to cause a stir. I never wanted to make an issue out of anything. I never wanted to grab headlines by using some sort of, latching on to some sort of flavor of the day. And I didn't. And my business suffered for years because I didn't want to get out there and mix it up any. Now, I don't really want to get out there and mix it up. I just want my voice out there so that if you want to use me as an agent, if you want to use our brokerage, then you know where I'm at every morning. If you don't like something I say, if you don't like something about me, I mean, after you've listened to my show, that's on you. That's on you. Don't call me. And that's, that's the way I see it. What am I going to do? Lose more business? I didn't have any business to begin with when I started. Like it was, and so the only thing that bothers me a lot is when I talk about things that I don't know if they're going to get banned on YouTube, because being banned in society is not cool, for lack of a better word. Being banned on a platform is not cool. It makes you feel like you've done something wrong when maybe you have or you haven't. Who knows? But it's a very strange thing. And so there's been times now. I remember one time I played a real estate video, a listing video, and I liked it. It was a great video. They did a fine job, and I got a copyright violation for the music because I played the video and the music was copyrighted. It's like, I get that. I understand, but I mean, I didn't do it on purpose. There was another time when I was reading an article and an ad popped up, and it was an ad for the NBA, and it was automatically claimed. And it was like, it's an ad for the NBA. I mean, like what is this? And so I had to go back and I had to cut out parts of the video. But it didn't hurt the showing, the viewings or anything, because there was nobody viewing it anyway. But the point is, I don't like being banned. And then so you start freaking out. So was it yesterday or the day before, I did an article that was on Google search. Okay. It was like one of the top 10 things searched for the day. And it was about a worker at Arby's who's possibly made the milkshakes a little bit disgusting. I was worried all day if they were going to take it down, if they were going to complain, if somebody was going to put in a problem. But I think part of it is I don't have that many people that watch, so it's kind of hard to report it because no one's watching it. I mean, if I had like 100,000 subscribers, I guess that'd be one thing. But I think I'm rocking 12 right now. So anyway, I think that if you're in business, you have to do something to get noticed. And I'm not proud of that. Like if you look at Hollywood, I mean, Hollywood is all about like on search. They're always on search. Well, why? They'll take anything they can and turn it into an issue. Like, it's not enough to be divorced, right? You have to be divorced like 6 times. It's not enough to have children. You need to have like 14 children. It's not enough to, you can't be like whatever you would think the norm is politically anymore. I think it's left. I think that's the norm. That's not left enough. You have to be further. Like it's very, very strange. How they have to virtue signal and they have to live their lives in a certain way, to generate clicks, to generate, headlines, to generate interest in their projects, interested in their shows, things of that nature. And so I don't particularly want to. I want to be able to laugh. I want to be able to have a good time. I want to be able to, do my show and, let the chips fall where they might. Who knows though? Who knows if I'll make it the entire time on YouTube? That's one of the things that's kind of strange is, you work. I mean, I have 2 to 3 hours in the show a day. And then that's every day except for Sundays now, because I got burnt out and I was like, I can't do this every day. So take one day off. And if I say the wrong thing right now, my channel can go like this. Now I'm not making any money. I'm not monetized. I don't have any ads or anything like that. I'm not being sponsored. So, I'm literally just, stuck. If I do something wrong, I'm out. So, and you say, well, John, go to a different platform, go to Locals. I like Locals and Rumble, but I can't figure out how they merged. And when I was there, they weren't letting you stream. So, what good is that? Plus, and then I was on Odyssey. I still have my accounts, but there was nobody watching. There's no viewership. There's nothing to promote your videos. There's nothing going on. And then, like, at least on my my video player in my theater room, the Rumble interface is just terrible. The search interface is just awful. Will they get it better? I'm sure over time, but you try to post a video to 3 different sites, 4 different sites daily, in addition to doing the real estate business, in addition to just trying to live. It's like, this is all consuming if you're not careful. So I've tried to maintain a balance, and I don't know if I've done a good job or not, but I guess we'll find out in the end. So in the end being like, if I look back in this 5 years, is it going to be like, oh, this was a great idea? Or am I going to be like, this was terrible. This was terrible. I don't know. Yeah, oh my gosh. I'm sorry, my email's getting out of control. Okay. Interesting. Okay. All right. Where are we at here? I did want to go over something since we're here. I had a YouTube short video blow up 3 days ago. I usually get 3 views, 3 to 5 views on my YouTube shorts. This particular YouTube short got 3,000. Why? Why did it get more views than every other one? What was it about that particular YouTube short that was so much better than any other ones? It makes no sense to me. It makes no sense to me. Like, I put out 2 YouTube shorts in the last 2 days. One had 2 views, the other one had 3. And yet the one before, 3,000 views. It makes no sense. Like, none of this is making any sense. Like, it makes no sense. Like, do they even know my channel's even out there when I do these live streams? Because I don't ever see my stuff like on YouTube, as far as like, it doesn't show ever. And it's like, it's very strange. It's very strange. So I just wanted to just kind of talk about this idea. Okay. So I put a YouTube short video out there. Okay. and it gets all these views. And so you go back and you look at it and you're like, well, what is it about this particular video? Was it the topic? Was it, the way it was filmed? Is there something that I can take from this and, use it? Like how did this work? And there's literally nothing. But the YouTube algorithm is so strong, in my opinion, that if someone there at YouTube wanted you to be a celebrity on YouTube, you would be, because they would push your content in front of everybody. And once they did that, people would watch it if they liked it. Now, I do think that my content's pretty good overall compared to some of the things that I've seen, especially in the real estate space. I mean, how many people are out there playing in the real estate space doing a live stream? Shouldn't mine be like given some advantage? Like when YouTube pays streamers to come over from Twitch, do you really think that they don't get the algorithm all fired up for them? Do you think that if YouTube is behind you and you come onto the platform from Twitch, do you think that YouTube is gonna go ahead and make sure that everyone sees you that wouldn't have otherwise? I mean, I understand you probably have a good audience following and they're more than happy to move over to YouTube for you, but don't tell me that there's not something going on in the background there. And the same thing is true, with me. Why do I not get any sort of boost from the algorithm that shows that bad? And even if it were, there's worse that still do better. It's a very bizarre thing. So I guess what I'm saying is I don't understand why. Like, I mean, in a way, it's like, are you doing this to yourself? Like, why? Like, is there something that you can do to make your videos show more, to more people? I mean, obviously the title and the thumbnail, but a lot of that's bullshit. I'm being honest with you, because I'll put out a video and I'll say I got sued. I get like 7 views because there's not enough people out there. There's not a critical mass following me, subscribing to me, that they can really use that information and push me to where I need to be. And that's the other thing is who's my audience? Is my audience a real estate agent? Probably, maybe, yes. Well, do they want news about, articles and stuff? No, they're in the business. They know exactly what's going on. They don't need to read that stuff. They know what's going on. So then is it like the general consumer? Well, yes, that's where I want to be. I want to be with the general consumer who's got some interest, some passing interest in real estate. And then I'd like to talk about the stuff. That's where I want to be. And so it's really weird to me to see, like, if I get views, now this is just what I've seen. If I get a lot of views, I get followers. You say, well, John, you only have 12 followers on your live stream. Yes, but I got 2 followers in a day on my short that had 3,000 views. And I probably get more. So when my videos are shown, I get followers. So I should get more followers if my videos are shown, but my videos don't get shown. And it's like, now, I don't think that YouTube, like, again, I don't think I'm even big enough for YouTube to even notice that I'm here. Like, I don't think that they're sitting there somewhere in wherever they sit and say, like, oh, that guy's got a new video out. We're going to go ahead and suppress the video. We're going to downvote it or downrank it. We're going to shadow ban it. I don't think they're doing that. There's just got to be something, though, with the YouTube algorithm that says, like, look, like, at some point, you've got to start showing my stuff because it's good stuff. It's just not being shown enough. I believe this. I also got bit up yesterday by some bugs outside, some mosquitoes, and it's like they're itching and it's... All right, I've gone on long enough. I don't know why I felt the need to go on so long today. I think I was curious. Like I said, I'm very curious to see, can I run a longer stream? So Twitter's got new stuff. Okay. So here, this came from the broke agent. The second my dog hears that I'm on a stressful real estate call, he runs out of the room and hides. Then I have to apologize to him. Then we got the mall. It says every time someone posts, they should just bulldoze the mall. Rachel gets a little bit stronger. Soon she'll be unstoppable. I think that's funny. This mall, Oviedo Mall. on Twitter. I don't know if you've ever. Great stuff. Great stuff. Wall Street Journal, real estate remodel versus tear down. Here are some things to consider if you're thinking of purchasing a home to either demolish or renovate. It's a very interesting question. Like we have a place here in St. Louis, Kirkwood, okay? And it was kind of like an artsy community, and they had small houses. And then they have like no building rules, I guess, because you can tear down a house there and build a new one. So at first it was like, knock down a shack and then build this McMansion. And now it's gotten to the point where like $250,000 and below, that thing's getting torn down, and you're going to put in $1 million house. And the issue there is so you've got, you're in a neighborhood where there's a $200,000 house and $1 million house right next to each other. It doesn't make any sense. The fabric of the community has been destroyed. But then again, progress. Like in Afton, like where I live, a $300,000 house in Afton was a mansion when I was growing up. A mansion. And there weren't many of them. And there's only two places where you could find a house that was $300,000. And it wasn't really in Afton. It was in Forest Haven, which is just kind of, Afton is unincorporated. So, anyway, so there were $300,000 houses because they had huge lots and they were big houses, ranches, a lot of them. But, the normal house is going for like not even $2. And now there's construction in what I would call like the lower part of Afton, which was never more than $100,000. They're going to put in $450,000 houses, like 3 of them, right next to a ditch. I'm like, but those that were not tear downs. Now they could tear down every single house over in the lower part of Afton, and they did. They tried. I always thought that was a good strategy. The problem is that the houses that they built were cheap. It didn't look good. No curb appeal. And the lots were kind of narrow. So you had to have a weird house. That was the thing about Kirkwood. They had big lots. It made it possible to do that thing. I've often thought, that's the best way to go is to, you want to invest is you buy, ways you have to be in cash because bank's not going to float you. But you go and you do infills. You go find houses that are just trash. There's, a 2-bedroom, 1-bath or a 1-bedroom home in today's world is just stupid. And then you put a nice house on there. The problem is there's these theories of like, there's these theories in real estate that somehow your house is related to the house next to you. And so that's why the pricing will be similar. And it's really not true when you look at these big houses, but the values do tend to go down. They do tend to go down. Like, so if you say you built a $200,000 house in a $100,000 neighborhood over 10 years, that $200,000 house would seemingly go down. Like, so, would it go down to 100? No. But it would kind of revert back to what the other property values are, which is so strange. I don't really believe it, but that's what I've seen. I'm just looking at ads on Twitter. Oh, interesting. So there's this article on Inman. I don't get Inman real estate news. I just don't pay for it. I don't want it. It says Compass approaching critical cash burn, says Mike Del Preet. But I know that guy as far as like he writes good stuff, but he writes on his own. Compass is a fascinating brokerage because they grew so fast. They have all these agents. What's going to happen if they can't make money? Because they currently don't. Oh my. Okay. I got all these showing confirmations on my texts, and it's like, ugh. Okay. All right. Well, let's get into it today. I know we're running late. I might not do everything that I normally do. I might switch some things up. We might not look at luxury homes today. But let's get into our Google search article, our Google Trends article, and see what that's about. It says Target shares sink 25% after company says high cost inventory woes hit profits. Okay. So let's just go over it here in St. Louis. I don't know if it's anywhere else, but there's Target and then there's Walmart. There's people that refuse to shop at Walmart because it's considered lower class, lower status. And so those people shop at Target and they feel that they're shopping at a higher class, higher status place. It may be different where you live, but this is where it is. I know, I go to Walmart. I don't care. There's this idea that Target treats their workers better or something like that. I don't know. All I know is that I don't go to Target because it's not close to my house. It says Target shares dropped sharply on Wednesday after the company said its quarterly profits got hit by supply chain troubles, higher fuel costs, and lower than expected sales of discretionary merchandise. The big box retailer said it saw a healthy customer, but a shift to experience-based purchases such as toys for birthday parties and luggage for trips. Target reiterated its revenue forecast, which called for mid-range single-digit growth this year and beyond. Okay, so let's get into it more here. Target on Wednesday reported quarterly earnings that fell far short of Wall Street expectations as the retailer coped with pricey freight costs, higher markdowns, and lower than expected sales of discretionary items from TVs to bicycles. Now, who buys a TV at Target? Company's share fell nearly 25% and hit a 52-week low. Its market cap, which stood at $99.82 billion after the close Tuesday, fell to about $75 billion Wednesday. Here's what Target reported for the fiscal first quarter ending April 30th compared with Refinitiv consensus estimates. Earnings per share, $2.19 a share versus $3.07. That's a big miss. Revenue, $25 billion versus $24.49 billion expected. The national retailer, known for its cheap, chic brands of apparel, home decor, and more, lapped an especially elevated sales period. A year ago, shoppers had extra dollars in their pockets from stimulus checks and reflected a sense of optimism with their purchases as they got their first COVID vaccines. Sales did grow compared with a year ago period. Comparable sales, a key metric that tracks sales at stores open at least 13 months and online, grew 3.3% in the first quarter. That is on top of a 23% increase in comparable sales in the year ago quarter, and it is higher than Wall Street's projections for 0.8%. At Target store and its website, traffic rose 3.9%. So, I mean, it seems like everything was good. Sales were up, traffic was up, profits were down. Even so, CEO Brian Cornell said the company missed the mark as its gains were accompanied by unusually high costs. While we saw healthy top-line growth in the quarter, we were less profitable than we expected to be or intend to be over time. Among the challenges, Target said profits got hit by inventory that arrived too early and too late, compensation and headcount that rose at distribution centers, and a mix of merchandise sales that looked different than before. Target's results mirrored Walmart's quarterly earning performance. Walmart reported Tuesday that it also missed on earnings, also citing higher inventory and numerous cost pressures. Walmart's share fell more than 11% on Tuesday and declined another 7% Wednesday, touching a 52-week low. Target reiterated its revenue forecast, which calls for mid-single growth this year and beyond. It did not provide earnings per share estimate. The company's net income in the quarter fell to $1.01 billion, or $2.16 or $2.16 per share, from $2.1 billion, or $4.17 a share a year earlier. Excluding items, Target earned $2.19 per share, 88 cents short of the $3.07 expected by analysts surveyed by Refinitiv. Those adjusted earnings per share dropped sharply, down nearly 41% from the year ago period. Total revenue rose to $25.17 billion from $24.20 billion a year ago, above analyst expectations of $24.49 billion. Now that's pretty numerous related. I say numerous, number related. I'm making errors, and it's fine. We'll just keep going. Let's continue. It says Target versus Walmart. While Target and Walmart both missed profit expectations by wide margins, they diverged in descriptions of the American consumer. Walmart Chief Financial Officer Brett Biggs told CNBC that the big box retailer has seen some budget-strapped customers trade down to the store brand for deli meats and buy half a gallon milk rather than a full one. Some others, he said, are seeking out new gaming consoles and patio sets. Target CEO Cornell, meanwhile, said that on a media call that the company is seeing a healthy consumer, but one who is living and spending differently while resuming some pre-pandemic habits. For instance, Cornell said toy sales were a standout in the first quarter and grew by the high single digits as families resumed bigger children's birthday parties. Luggage sales were up more than 50%. On the other hand, sales of items like TVs, kitchen appliances, and bicycles dropped off as consumers shifted their spending towards experience-based purchases like booking trips and buying gift cards for restaurants. Cornell, however, warned that cost pressures will persist in the near term, stressing that some are beyond the company's control. One of those factors is the price of gas, which hit a national average of 4.523 gallon on Thursday. $4.52 I'm going with. I'm sorry. When I read it, it's not as easy for me to just make the conversion to dollars. I don't know why. I don't know if I'm the only one that has that happen. But what else? Let's continue. Still, he said, it will continue to invest in the business, open new stores, and said Target's bright long-term trajectory remains the same. With inflation at nearly a 4-decade high, Chief Financial Officer Michael Fedelk, we'll go with that, said on a call with reporters that Target will focus on offering value, even if that means absorbing some costs. He said raising prices continues to be the last lever we pull. We've earned so much trust over the last several years with investments we've made in price, and we aren't about to trade that out at the current environment. Well, what do you guys think? Does it matter? Does it matter what you think? I mean, I don't know. I don't know the answer. I should have done, I screwed up. I should have checked something. I got rid of it so fast. Yesterday, the market really went south. I don't know what we're doing today. Are we on a dead cat bounce? No. S&P is continuing to fall. It says S&P falls again on Thursday, pushing the benchmark to the brink of a bear market. Treasury yields fall. Prices climb as investors seek shelter from stock sell-off. So the Dow Jones is down 380 right now. The S&P is down 30. And those are the indexes. I don't know. Not good. One of the articles on CNBC that is kind of interesting is we'll just, I think I can do this on the fly. I think I can do this. Here, I need to do this. There. Can you see it? Okay. Good. Existing home sales fell in April to the lowest level since the start of the pandemic. What is this about? It says sales of previously owned homes in April fell to the lowest pace since the COVID pandemic started, according to the National Association of Realtors. Okay. And this was put out today. I'm just going to set up things so that it can look decent. My whole thing is messed up here, so we've got existing home sales. Well, I got to get to the right screen. Are you there? Okay. It says sales of previously owned homes in April fell to the lowest pace since the COVID pandemic started, according to the National Association of Realtors. We're moving back to pre-pandemic sales activity, but I expect further declines. The tight supply kept home prices higher despite rising interest rates. The median price of an existing home sold in April was $391,000, the highest on record, an increase of 14.8% from a year ago. So yes, this is what I'm seeing. I'm seeing people not putting their house on the market because they can't go find anything better. I'm seeing people that constantly get outbid. Buyers are constantly outbid for the houses that do come to market. And I just don't see the inventory that's going to allow people to get some relief on the buyer side on home prices. On the seller side, you have a house, you have like a piece of gold. I mean, it's amazing. Sales of previously owned homes in April fell to the lowest pace since the COVID pandemic started, according to the National Association of Realtors. Existing home sales declined 2.4% compared with March to a seasonally adjusted annualized rate of 5.61 million units, the group said. Sales were 5.9% lower than in April 2021. That's the slowest rate since June of 2020, which was artificially slow since the economy was struggling with sweeping shutdowns due to the coronavirus. That has not been my experience. That was not my experience. I actually had buyers in 2020, 2019 that couldn't buy houses then either. But we would lose out. There may be like multiple offers meant like 5 offers. And that was a lot. And that only happened every once in a while. Normally you were in competition with 2 or 3 other buyers. That's not like the 22 I just faced. Okay. And people weren't really that scared about any of this stuff. They were still working. A lot of people who lost their jobs were people that were in service industries, in my opinion. You know, and I don't think that was right. Okay. But it was like the restaurants, those people got slaughtered. And I don't think it was right. Don't get me wrong. I think it was terrible. But, you know, this is not what I see. It says this count represents closings during the month, so it reflects contracts likely signed in February and March when the mortgage rates were rising. The average rate on the 30-year fixed mortgage started in February at 3.66% and in March at 4.78%, according to Mortgage News Daily. It's now hovering around 5.45%. I would say that's true. If you look at this right here on Deerwood Realty, well, there's a nice house. We're at 5.44% today, down 1 basis point from yesterday. I mean, that's true. I agree with that. So anyway, we are moving back to pre-pandemic sales activity, but I expect further declines, said Lawrence Yoon, chief economist for NAR, citing that rates are now higher than they were when the contracts were signed. That's absolutely right. They are. And people can't afford, like what they could afford before and now are 2 different things. It's really bad. Not only were buyers contending with rising rates, but they saw very little relief in the shortage of homes for sale. Inventory at the end of April stood at 1.03 million homes for sale, which is down 10.4% from April 2021. That, at the current sales pace, that represents a 2.2 month supply. There's not that much. It's really bad. There's really not enough homes. And tight supply kept home prices higher despite rising interest rates. The median price of an existing home sold in April was $391,000, the highest on record, an increase of 14.8% a year ago. The median is skewed higher because sales continue to be more robust on the higher end of the market where the supply is more robust. Sales of homes priced between $100,000 and $250,000 fell 29% year over year, while sales of those priced between $500,000 and $750,000 rose 19%. Sales of homes priced over $1 million rose 16% compared with a year ago. I don't think this is true either. I mean, you can say this, but like all the people that I know that can afford a $250,000 house at 3% are now like at 180 at 5.5%. So I just don't agree with this, and I'm sorry. Sales continue to be swift with the average home. And by the way, that's the other thing is like a house that would have been a $150,000 house 2 years ago is now like a $220,000 house. It's ridiculous. So, I mean, these $500,000 houses, these were $300,000 houses 3 years ago. I mean, that's the issue. It says sales continue to be swift with the average home sitting on the market just 17 days before going under contract. If it's going on under contract in 17 days, that's crazy. Because here in St. Louis, it's like the weekend. The all-cash sale remained high at 25% of all sales. Investors made up 17% of the sales, which is a problem, and no one seems to do anything about it, nor do they care. And first-time home buyers made up just 28%. Historically, first-time home buyers generally made up to 40% of the market. It's investors driving this. They're driving this right off of a cliff, and there's nothing anybody wants to do about it. So, okay. The number of households interested in becoming homeowners remains high despite waning confidence that now is a good time to buy. This is especially true among younger home shoppers who are likely to be first-time buyers and are struggling to save for a down payment as rents continue to hit records, said Daniel Hale, chief economist for Realtor.com. At the same time, seller expectations for higher down payments seem to be rising, fueled by a still competitive housing market and repeat buyers with relatively more equity at their disposal. Sales of newly built homes will be reported next week, but mortgage applications for those homes dropped nearly 11% during the month compared with April of 2021. New home purchase activity declined on a monthly and annual basis in April as the spike in mortgage rates cooled demand and home buyers continued to grapple with rising costs, supply chain issues, and extended completion timelines, said Joel Kann, MBA's Associate Vice President of Economic and Industry Forecasting. The MBA is predicting new home sales will fall for the fifth consecutive month to the slowest pace since May of 2020. This is true. This is what I've seen. Development that's across the street raised their prices, and they were already really expensive relative. So anyway, well, you know what? The show didn't go like I thought it would today. I'm not going to lie. I don't know. I've just been experimenting with stuff. I'm not going to stay on much longer. I'm just going to head out. We'll do what was going to be. We'll do what was going to be today's show tomorrow. But I thought that it was important. Like when retailers start, like the retailer has said this, Walmart and Target have said this. They said that the consumer is strong. Could they both be wrong? Maybe. I mean, there's issues in the economy. Okay. I think, do we all accept that as true, or do we still think that this is an economic boom and everything's great? It's not, by the way, I'm not even talking about for positioning yourself to take advantage of the opportunity, because I don't know. I mean, on houses, if you need to buy a house, you don't have a choice. You pay the money. You know, I mean, it's like, this happened to me in college. When I graduated as an undergraduate, like the job market was terrible. And so we were sitting there, and how do you get a job when the job market is like in the worst unemployment that had been for 15 years? It was bad. And so, I mean, you can't help cycles. Like if you need to buy a house right now, say you're going to get married, what are you going to do? You don't have a choice. It's bad. It's bad. So, I mean, I don't know. It's kind of what I have for you today. I think I'll head out. Tomorrow it should be the same time. Shouldn't be an issue. Monday should be good. I think, like I said, I might switch over to StreamYard tonight. I'll let you know. And other than that, thank you for watching. I will catch you tomorrow right around 9.